A mysterious $9 million crypto bet linked to a Farage backer's name is raising serious questions tonight. Financial Times reporters have uncovered something strange on Polymarket. An account named GCottrell93, sharing a name with a known financial backer of Nigel Farage, received $9 million in crypto from sources nobody can identify. That money was placed as a bet on Donald Trump winning the 2024 election. When Trump won, the account cashed out a massive profit. Here's why that matters. Nobody has confirmed who funded the wallet or who ultimately walked away with the winnings. Farage himself hasn't been directly implicated, but the shared name raises uncomfortable questions about foreign money flowing into political betting markets. Prediction markets like Polymarket operate with far less oversight than traditional financial exchanges, making this kind of anonymous, high-stakes wager nearly impossible to trace. Regulators are already uneasy about prediction markets influencing elections, and this case adds fuel to that fire. If large anonymous sums can move markets tied to political outcomes, it opens the door to manipulation, foreign interference, or simple money laundering disguised as gambling. Polymarket has not commented publicly on the identity behind the account, and the FT investigation is ongoing. So what happens next? Investigators will likely push for more transparency on wallet ownership, and lawmakers on both sides of the Atlantic may use this case to argue for tighter crypto betting regulations. For now, the $9 million mystery remains unsolved, and so does the question of who really profited from Trump's win. Next, a very different kind of crypto story. This time out of North Korea. North Korean authorities have reportedly arrested a group of former state-linked hackers accused of stealing funds from 2 domestic banks and laundering the proceeds through cryptocurrency. According to Daily NK, these were once trusted cyber operators working for the regime, now turned against it. The arrests suggest even Pyongyang's own hacking apparatus isn't immune to internal betrayal. For years, North Korea has used state-sponsored hacking groups like Lazarus to steal billions in crypto from exchanges worldwide, funding its weapons programs. This latest case flips that script. Insiders allegedly hacking their own government's banks and funneling stolen money through crypto mixers to cover their tracks. It's a rare public admission of internal corruption from one of the world's most secretive regimes. The bigger picture here is that crypto laundering isn't just a headache for Western regulators. It's now a problem inside North Korea's own financial system. Analysts say this could trigger a wider internal crackdown or reshuffling of the country's cyber operations. It's also a reminder that blockchain trails, while pseudonymous, are traceable enough to catch even state-level actors. Switching gears to U.S. politics, where the Trump administration just made a stunning admission. The Trump administration has acknowledged canceling $7.6 billion in clean energy projects and admitted the decision was based, in its own words, solely on the political identity of the grant recipient's state. 16 of the affected states voted for Kamala Harris in the 2024 election. That's not spin from critics. It's language from the administration's own filings. These grants funded solar, wind, and grid modernization projects across states like California, New York, and Illinois. Local officials and clean energy companies say they'd already begun construction or hired workers based on federal commitments. Now those projects are frozen or canceled outright, leaving state governments and private firms scrambling to figure out what comes next. Legal experts say openly admitting a political motive for federal funding decisions could expose the administration to serious lawsuits. Using state political leanings as a basis for spending decisions may violate equal protection principles, and several state attorneys general are reportedly already exploring legal action. This story is likely far from over. Now to a milestone in crypto markets that's got investors talking. For the first time ever, trading in real-world assets, stocks, commodities, and market indices, has overtaken pure crypto trading on Hyperliquid, the world's largest decentralized derivatives exchange. That's a notable shift on a platform built primarily for crypto-native trading. ARK Invest says this moment could mark a turning point for how blockchain technology gets used. ARK's analysts argue this shows growing demand for tokenized versions of traditional assets, letting traders access stocks and commodities around the clock without traditional brokers. It suggests decentralized platforms aren't just a crypto sideshow anymore. They're becoming infrastructure for all kinds of financial products. That's a big deal for an industry still fighting to prove its real-world utility. Whether this trend holds remains to be seen, but it fits a broader pattern of tokenization gaining traction across finance in 2026. Traditional asset managers are increasingly exploring blockchain rails for efficiency and round-the-clock trading. Keep an eye on whether other major platforms follow Hyperliquid's lead. From markets to politics, and a wild night in Washington, President Trump delivered a rambling, insult-filled speech at the White House Correspondents' Dinner, at one point turning on his own speechwriters mid-remarks. "Am I supposed to be a comedian?" he reportedly asked the crowd, seemingly frustrated with material he felt wasn't landing. The event, usually a light-hearted Washington tradition, took an awkward turn. This dinner was actually a rescheduled version of the original April event, which was postponed after a gunman disrupted the initial proceedings. Trump referenced that delay directly, saying the speech he'd originally prepared, quote, was going to be a doozy. Months later, the rescheduled version apparently didn't go quite as planned. Reactions in the room were reportedly mixed, with some laughs but plenty of awkward silence as jokes fell flat. Political commentators have already begun dissecting the moment online, with clips of the speech circulating widely. It's another example of how unpredictable these traditionally scripted Washington events have become. Whether you see it as harmless political theater or something more telling about the administration's mood, the moment has certainly given late-night hosts and social media plenty of material this week. And finally, back to the money flows, because something interesting may be happening in crypto markets. Cointelegraph's latest Crypto Biz Roundup asks a big question. Is capital rotating out of AI stocks and back into crypto? Bitcoin ETF inflows have picked up recently, even as enthusiasm around some AI trades appears to be cooling. That combination has traders speculating about a broader shift in where big money is heading next. Adding fuel to that theory is potential regulatory progress in Washington through the Clarity Act, which could give crypto firms clearer rules of the road in the U.S. Clearer regulation has historically been a factor that encourages institutional capital to re-enter crypto markets. Analysts are watching closely to see if this translates into sustained inflows. It's important to stress this is speculation at this stage, not certainty. Markets can rotate back just as quickly as they rotate in. Still, the combination of ETF flows, cooling AI hype, and regulatory clarity is a storyline worth watching heading into the rest of 2026. So here's our question for you. Do you think prediction markets like Polymarket need stricter identity rules for large crypto bets, or should they stay anonymous? Drop your take in the comments below. And if you want sharp, no-nonsense coverage of stories like these, hit subscribe. We post fresh deep dives twice a week.